What's going on, everyone? So I'm gonna look at another stock today, and what stock is I'm gonna look at now. I am building this portfolio for a specific reason. It's my bridge account.
Fire and going to retire early, why not fund a brokerage account, whether it's joint account, 401k at work, just like you can in your Roth IRA? You can fund a taxable investment account by index funds, by index target retirement funds.
And I want to use it as a dividend portfolio.
So, what are dividends, and more importantly, what do they mean for investors? Are they really just free money from generous companies? Dividends are regular payments of a company's profits to shareholders. They're sort of like rewards for putting your money into their venture, similar to the way you'd receive interest for money in a savings account or a bond.
So I have some requirement. Why dividend? Well, because I want to get paid for owning the stock because the companies can always go bankrupt. Now, there's few other things I can talk about it, but let's talk about my requirement for my dividend stock that I want to put in my bridge account. My first requirement is it has to pay dividend. My second requirement has to have good growth, and my third requirement has to have good financial standing. Now, the fourth requirement is not a really strong requirement, but it's a requirement for my stock portfolio. It's what I predict to be in the future because you need to learn how to invest and kind of predict what's going to go on in the future. Now, what stock is it going to be? SSR mining is what I'm looking at right now. So there's supposed to be a diverse portfolio with high quality assets. So they mine gold, copper, and other valuable metals. So if you don't know, right now I am trying to diversify my dividend portfolio. So I can't just go all into stocks like tech, and I can't go all into REIT. So I'm trying to make sure it's properly diversified. The reason why is the S&P 500. If you didn't know,
Over 30% of the S&P 500 is made up of tech stocks, and a significant portion of that comes from just a handful of companies. Apple is the largest holding, making up roughly 7% of the index, followed by Microsoft at around 6% and Nvidia at about 6% as well. Amazon accounts for about 4%, while Facebook, now Meta, sits at 3%, and both Google or Alphabet and Tesla each hold about 2%. Altogether, these 7 companies make up about 30% of the entire index.
and the issue with it is too high in tech, and I don't want to have all my stocks in the tech industry or majority of my stocks because if tech takes a plummet, my portfolio will take a plummet, and I don't really want to do that. I want to have a nice diversified portfolio. Now, this is the company. They have operations, looks like all over the world, and they mine gold. They operate. They they say they try to go green and all that stuff. But let's look at the MSN and see what's going on with it. Now, right now, let's look at the 1 day. 5 days is a negative 10%. The 1 month is a negative 12.76%. And 3 months is 1.9 or 27.67%. Let's check the dividend history because it doesn't show on MSN. So their dividend yield is supposedly 1.54%, and they have an annual dividend yield of 0.1 or 14 cents. So let's look at the history real quick. They do not have a consistent dividend payout. So in 2023, they did pay dividend, but now they do not pay dividend. So it does not meet one of my requirements. It doesn't pay dividend. And this is why you have to do your due diligence because a lot of people actually online saying this is a good stock to go into for a dividend, but they're not paying a dividend. So guess what? I can't add it to my portfolio just because that. But let's continue looking at see if it's even worth adding to one of my other portfolios, like my stock portfolio that doesn't really require dividend. But let's look at it. my year to date, it says it's up 30.6%. That's a really good growth rate. 1 year, 87%. 3 years, 60, and negative 27 for 5 years. So let's look at the finance real quick. Well, they run in the billions. They had a good increase. Now, last year, 2024, they had a decrease by 30%. And the gross margin is supposed to be 36.29%, but they're in a negative profit of negative 35%. And they had that 2 years in a row. So financially, I can't tell you that this is a strong financial company because they only have a few years on here that they had a positive profit. Looks like majority of the time they're in the negative. So I will say this right now. Financially, they might be able to afford what they're doing, but they don't make any profit and does not make sense for me to buy a company that does not make money. Now let's see who's invested in it. BlackRock's invested in it. Vanguard's investing in it. So they have some good investors. Now let's go into AI and see what AI says about it. Valuation, AI says it's pretty good. Earning is a 0. Future growth is a 0. History performance is 1 out of 6. And financial health is 1 out of 6. The investors right now says this stock is a hold. So personally, what do I think about this stock? Now, I can go more in depth, but there's no point to go more in depth about this company because the growth looks like it's going to be growing pretty well in the next few years, and because it's recovering, so the growth is going to be good in the next few years. That's my prediction on this stock. So if you want to add this to your stock portfolio, hey, it'll be a good one to add if you're looking for growth. But personally, for me, if I can't really trust what these charts says, because this doesn't tell you about future performance, it just tells you about past performance. But if you base it off of this, it looks like it's going to be recovering, and it's gonna be making about, it looks 87%, 30%, so it's gonna be making about 50% gain if you estimate it like that. Now, like I said, this does not pay dividend, so I will not be adding this to my dividend portfolio. So all right, so if I'm not going to add this to my dividend portfolio, will I add it to one of my stocks portfolio or add it to my portfolio? I'm going to say no, because most companies I purchase are always in the positive in the finance. Now, they might have 1 or 2 bad years, but this had 2 bad years in a row, and that does not mean it's financially unstable, but I just can't see me investing in a company that's in the negative. Now, I can do further research into this company and say if it's good or bad to buy it, because right now I'm just doing a superficial looking on top. Should I investigate it more? But right now I'm not going to investigate it no more because the finances is not in a situation where I want to look into it more. Now, you should investigate it more if you're going to try to buy the stock, but at the end of the day, I won't be adding this to my portfolio just because the numbers don't make sense. They don't pay a dividend based off the dividend history. They don't pay, they don't sit in a good financial standing. Now, the future growth of this company do look really good, but the issue with this is it's right now they're in the negative, and I don't want to risk money in a company that could eventually go bankrupt. Because at the end of the day, if I don't see a positive outcome in their finances, that means they could have a possibility of filing bankruptcy anytime, and I don't want to deal with that. So that's all I got for you. I won't be investing in SSR mining. It's just not going to be worth it for me. But you should do your due diligence and see if you want to do it. So like and subscribe, comment down below if you think this should be added to your portfolio. But personally, I don't think it's worth it.